Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. Let's get right to the charts. Here's the Australian US dollar. We continue to see weakness there, no surprise. We need to pan out to a weekly chart to get scale on this. The long-term primary pattern, if you go back to the 2010 low, is still bullish. However, short-term primary down, secondary down, day-to-day down. We have support just above 90 even. The thing you have to remember about the Australian dollar is regardless of a slowdown in China, regardless of their own slower GDP growth, you still have a pretty good yield on this guy relative to everywhere else you get around the globe. So at these levels, it's kind of hard to expect much more, at least over the near term. Longer term, however, we're pretty bullish on the U.S. dollar, and what we've seen to date about the bull in the dollar has not benefited the Aussie. So I think long term, perhaps more weakness. Short term, though, maybe a little bit overcooked. We see support just above 90 even. Going back to the daily chart, you could see, I guess you could say it's starting to stabilize just above 92 there. Short term, remember, they still have the pretty good yield on that, and in a Forex account, at 50 to 1, that's a pretty good that's some pretty good juice. So you can't write off the Aussie at these levels currently because of that yield, that big carry on it. Next market we'll take a look at would be the Euro US dollar. Euro US dollar, very interesting to us right now. Here's another one where I think we benefit from panning out the bigger picture. Let's look at the weekly chart, and you can really see how everything's aligned here. And not that the grand pattern's exactly a tradable pattern, but it's influential nonetheless for longer-term traders. So here's how this guy spreads out right now. You do have the majority of patterns down now, the majority of tradable patterns. Even if you don't count that grand as a tradable pattern, you have to count the primary, that short-term secondary, the 20-day. They're all down. You have the secondary up, the day-to-day up. So in my book, you have the majority of patterns down. That's a bearish situation, so we would look for more downside here. Short term, well, not so short term, on the daily chart, that is, you had a nice sell signal there. You had a nice big change of direction. You reversed that trend up against our RTT level, that risk tolerance threshold level right there. So predictable level. You had the market turn around, and you had a nice sell-off. So we think that you'll have more of that. The day-to-day pattern is still up. That green line marks my RTT level, that day-to-day RTT level. So that's big support currently. So you get a couple of closes below there on a 4-hour chart. Maybe you chip below it on a daily chart. That's going to be big. We like the downside in the euro. Long term, we're dollar bulls now. That's how the patterns are aligned for us. So we think accordingly you'll get some more downside in the euro, and we think to date the euro's been pretty strong. If you've seen pretty good dollar strength without euro weakness, once you do get euro weakness, because it is over 60% of the dollar index itself, you're really going to see some dollar strength. If this market does capitulate lower, we think it's going to. We see the majority of patterns down right now. We think that move is going to accelerate once this level here, right around 129.65, gives way to the downside. Next market we'll take a look at will be dollar yen. You have to keep in mind the primary pattern's up, the secondary pattern's up. That's powerful. That's why that change of direction right there when you took out the short-term trend line break, when you changed direction higher here last week off Bernanke's testimony, that's why traders take that seriously. We think there's more upside here. Of course, we're dollar bulls right now, and that's not an opinion. That's objective analysis from our standpoint. You have the majority of patterns aligned higher for the dollar. We're big believers that these longer-term, intermediate-term patterns we see on the chart are absolutely a reflection of underlying fundamentals. You're not going to see a big move unless it's supported by the fundamentals. We think we're in the midst of a big move right now, and that's what the charts are telling us. Dollar yen looking pretty strong. Let's go to the U.S. stock market. Stocks found support on a intermediate term RTT level. However, it's a tough time of the year seasonally to be long the stock market. We think you have to take a hard look at selling rallies in this market, at least short term, perhaps swing traders, short term traders. We think you can look at the downside, and it comes back to the pattern for us. This was a higher high. The market was looking pretty good here. However, you put in a lower low. So you have a lower high here. We talked about this last time. You had that double top right there, lower high, double top, followed now by a lower low. We think short term you can get away with selling rallies in this market. And in fact, it goes back to that strong dollar thesis. Yeah, there'll be days where you'll have a strong dollar and a strong stock market. Likewise, there'll be days you'll have a strong dollar and a weak stock market. But we think overall, long term, that stock market weakness would be more supportive of the strong dollar thesis right now. And I guess in a way we like stocks on both sides, but you get a pretty good rally. We think it needs to be sold, at least short term. Hey, long term, it's still a bull. However, we could see a steeper retracement of this last leg up, really, which started in last November. We can't rule out a 50% retracement of this overall move, which would take us short term quite a bit lower. Hey, let's look at the gold market. You know, I missed the gold. I thought perhaps you see some support in here hold. It didn't hold. I've been a bear for a long, long time, and that should teach me for trying to stick my neck out and say there's talk about support in a bear market, and that's why it doesn't work. That's why you want to stay on the side of the pattern. Long term, hey, let's pan out to a weekly chart. You shifted that shorter term primary pattern down. Your primary pattern is down now, followed by the secondary the day to day. You have grand pattern support down all the way at 1100. So we think 1100 would be a good downside target for this market. Again, it comes back to that dollar thesis, the bull dollar thesis. If euro goes south, the dollar is really going to accelerate, and we think that will continue to pressure the gold market lower. So it's all about buying dollars. It's all about that bull dollar thesis for us. Hey, thank you so much. We look forward to seeing you next time. My name is Jay Norris. Keep in mind, trading is a risky endeavor and not suitable for all investors.